may not always tell the full story, and language barriers or unfamiliar regulations can make due diligence even tougher. If you're watching this stock, keep an eye out for any news about major contract wins, changes in management, or regulatory updates. These can sometimes explain sudden price moves, but more often than not, the stock will move for reasons that are hard to pin down, leaving investors scratching their heads. For most investors, this level of volatility and lack of clarity is a major red flag. It's easy to get caught up in the excitement of big price swings, but the risks are real, and losses can mount quickly if you're not careful. If you're a trader who thrives on momentum and volatility, just remember, the same forces that can deliver quick gains can also wipe out your investment in a flash. It's a high-stakes game, and the odds aren't always in your favor. For long-term investors, the story is even more sobering. The fundamentals of the business, low margins, intense competition, and limited growth prospects, mean that even if the company performs well, the upside may be limited. Caution is not just recommended, it's essential. In many ways, buying this stock is like buying a lottery ticket. The business itself is steady but unremarkable, while the stock price behaves unpredictably, driven more by speculation than substance. For most, the odds simply aren't worth it. Unless you have a compelling reason and a very high tolerance for risk, it's probably best to steer clear of SU Group holdings. In the world of investing, sometimes the best move is knowing when not to play. Third, Evoke Pharma, Evoke. Unlike CLDI, Evoke has an FDA-approved product, Gemoti, a nasal spray for diabetic gastroparesis. The innovation? Delivering a known drug via nasal spray, helping patients who can't keep pills down. The challenge: slow sales growth. Despite approval, prescription numbers haven't taken off, and the company isn't profitable yet. Key factors: can they ramp up marketing and convince doctors and insurers to support Gemoti? Competition from cheap generics is fierce. Cash burn is a concern. If sales don't accelerate, dilution or worse could follow. Watch management's updates on prescription trends and insurance coverage. This is a turnaround bet. If sales inflect, the stock could be undervalued. If not, it could go to zero. Success depends on execution, not just the product. Patience is required. Turnarounds take time. If you believe in the team and the product's edge, it's a speculative buy. Otherwise, it's a wait and see. Last up, let's talk about Basel Medical Group, often abbreviated as BMGL. This company is the latest entrant in the Asian medical distribution scene, and it's already turning heads, not just for what it does, but for how little is actually known about it. In a sector dominated by established giants, BMGL is the new kid on the block, and that alone makes it worth a closer look. BMGL is a relatively new and little-known medical distributor operating primarily in Asia.